Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour time frame, where we are looking at a finished 5-wave impulsive structure to the upside in a wave 1, a potentially finished wave 2, but by all means you look for continuation to the upside in a wave 3 without price taking out the low here at 89k. Now the two most important levels on the chart at the moment is the 0.618 at 104.8k and the 1.618 at 110.6k. If price can move towards the upside and touch the 1.618 at 110.6k, it will significantly decrease the probabilities for the orange polyline price action, as then the probabilities for a flat A, B, C and then continuation up are going to decrease. If price moves towards the downside first without taking out the high and moves to 104.8k, it will increase the probabilities for the orange polyline price action for the potential of a flat ABC and then continuation afterwards. Now in general, your most common retracement target for wave 2 is the 05786, but then again, of course, the 382 is a retracement target for a wave 2. But if price would move to the downside, we do still have some additional support here, 94.1k to 94.6k, and below that 91.4 to 92k. The bearish scenario is a flat structure where we then have a finished 3-wave corrective structure to the downside in a wave A. We look to finish a 3-wave corrective structure to the upside in a wave B, and then we want to see a 5-wave impulsive structure to the downside in a wave C. The common target for a wave C in a flat is taking out the low over here of your wave A. Now you can see that I have two colored boxes here on my chart, an orange and a red box. Now it is most common for a flat wave B to move into the red box target area, because that is the area for an expanded flat. It's the 1.236 to the 1.38, 112.9k to 115.7k. The orange box here is the target for a regular flat, which is less common than the expanded flat. And that is where we are at the moment, 106.4k to 109.4k. However, what you can also see here is the white fibs on my chart. And if you label this structure to the upside as either an ABC 535 or a WXY double zigzag, doesn't really matter, as wave B is most commonly a zigzag family structure and the WXY and the zigzag have similar targets, then by all means the minimum target for both the wave C and the wave Y is the 0.618, and at the moment we have not yet touched the 0.618. So in other words, preferably, even in this scenario, you are still looking for price to move towards the upside. Now the 0.618 is a minimum target for a C or Y, but the most common target is around the 1-to-1, which of course is close to the expanded flat target area as well. So that is an important area to at least keep in mind. Now then I want to say that if we go to the 3-minute time frame and we look at the 886 here, then you can see that after price created the high and retraced to the downside, we moved back up and touched the 886 Fibonacci taken from this high here to the low, which basically means that the probabilities in general are higher to still take out this high. Any move to the downside coming off the 886 has a higher probability to be a corrective structure, not an impulsive structure, which increases the probabilities to come back up later and still take out this high. Looking at the CVD divergences, all of the bullish CVD divergences have now played out. There was absorption of market shorts with limit long orders supporting the move towards the upside. Now price over here locally shows a bearish CVD divergence. However, in a trending environment, there is a higher probability of leading CVD divergences, which basically means that the bearish CVD divergence has a higher probability of being broken, so not to play out. Now it's all probabilities, of course it can play out, but for me to trust bearish CVD divergences in an uptrending environment, I either need to see a much bigger sideways range, or I need price to move towards the downside, change the market structure, supported by many more bearish CVDs as price is then creating lower lows and lower highs. So at the moment, for me personally, not yet interested, but everyone has their own plan and their own strategy, of course. Now, we already have volatility today, Monday, January 20th, of course, news-wise, right? We have the inauguration day here, so some volatility on the chart. Make sure you trade safe and manage your positions well, because stuff like this can happen to both the upside and the downside, of course. And then finally, we talk about the probabilities and the polylines. Now, the probabilities are actually based on the fibs today. So the 1.618 on my chart over here, if price can touch the 1.618, it increases the probabilities for an impulse to the upside, which is either going to be labeled as a wave 1, as a wave C, or as a wave 3. Now, what is the difference? If we're looking for a wave 1 or C, we want to see a 1, 2, 3, 4, a 5-wave structure, eventually finish, and we want to see a retracement. The retracement will decide if this is then labeled as another 1, 2, 3, or if this becomes an ABC and we go down. Because if this is another wave 1 and you look for 2, then this wave 2 should be a 3-wave corrective structure, right? And then you continue up. If this is going to be labeled wave C, then we need to see an impulsive 5-wave structure to the downside. So that's the difference. So short term, the price action is quite similar. You want to see a 5-wave impulse, but then it's all about the retracement to the downside. And if we want to label this a wave 3, well, we need a lot more strength and a lot more power. At the moment, probabilities aren't highest that this move to the upside here is a wave 3 of then a 1, 2, and a 3 to 120 plus K. At the moment, probabilities are higher that this structure to the upside is either labeled as your wave 1 or your wave C in the bullish scenario if you touch at least the 1.618. So it all depends on the retracement. If you touch the 0.618, it increases the probabilities for an ABC to the upside and price to follow the orange polyline. However, locally here on the 3-minute time frame, as explained, price has touched the 886 Fibonacci, which does increase the probabilities to take out this high. Right, so locally on a very low time frame, probabilities are still higher to take out the local high, which of course also increases the probabilities for price to reach the 1.618 at 110.6K, which therefore increases the probabilities for the green polyline, which is your bullish scenario, impulse up, correction down, impulse continuation, or the red polyline, which is impulse up labeled C and then an impulse towards the downside. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.